Dear ones, we are looking to bring you enlightenment, to offer illumination in stormy skies.
Alien, magical flying, being.
PT. It's my first YouTube video. Thanks for watching. This one's going to be about Wyckoff. So we're going to talk about liquidity and Wyckoff, and if it works, if it's a meme, which I guess everything that works in the market is kind of a meme. So what market is market dynamics are all mimetic in nature. And we're going to talk about why it works if it does, and how it ties into liquidity, which is a buzzword, but also something that really matters, especially for crypto markets. So Wyckoff is this dude here, some old white guy, and looks pretty smart. And essentially, he had a theory about the market that it's kind of it's kind of a conspiracy type theory that the market is manipulated, and that that's the core about it. So essentially, what he's saying is that we have people that control the market, and by putting it into certain market cycles, and I'm not a Wyckoff expert at all. I'm more like the liquidity aspects of it, and I think it makes a lot of sense, especially for crypto markets that are unregulated. But essentially, what he's saying is that you go through these larger market cycles because there are people who control the market, and essentially what they're doing is they're filling their bags at the bottom and dumping their bags at the top. And in order to do so, they keep price locked in ranges during those times. And along the way, there's a ton of stuff like springs and stuff like that that are designed to engineer liquidity. What we're going to do is just kind of look at the Bitcoin chart. And we'll start off with a preface that you kind of have to accept in order to... let me get some of this shit off my chart. Premise you kind of have to accept in order to believe in Wyckoff, and that is that the market is manipulated. And the crypto market, it's a much easier assumption to say the market's manipulated than that it's not. And I don't mean this in some I'm not wearing a tinfoil hat when I say it. It's just like pretty clear. Like it's a lot of anonymity, and anyone can move stuff. Buy and sell Bitcoin on these non-KYC exchanges. Like, come on, it's manipulated, dude. Like, let's get past that. That's an assumption I think we can all make. Not that it's bad. I think that it actually makes it easier to trade if it's manipulated. You just have to figure out what they're doing, the manipulators are doing, and if you can figure that out and you can ride with them, then you're good. There's very few fundamentals in this market. It's mostly technicals. It's not like some stock where we look at their earnings or something. All that shit's coded in. Like that shit matters, but it's already it's not anything that's going to change on us. You can get FUD like China banned Bitcoin or something like that, but and that matters, but that only matters because of market psychology, not because of fundamentals. There's no dividends it's paying. It's not a traditional stock. It's not a traditional forex type commodity either, which is slightly more regulated, but still manipulated by state actors, presumptively. Let's go into a higher time frame here, and we're just going to delete this whole chart after we look at what I've got here, and then we're going to talk about the cycles. So what I've got is a couple high time frame trend lines here, which I think matter a ton, and I think that Wyckoff principles can be applied to those. We'll get into that soon, but we're going to go ahead and delete this now. We'll make it again here in a second. All right, so the principles are that in order for someone who is in controlling supply of an asset, let's talk about it in terms of shitcoin. It's easier to understand. Say there's a shitcoin on CoinMarketCap somewhere, and you can go and you can buy it all up, and once you control enough of the supply, then there's no one left to sell, right? So say it goes into it's a accumulation cycle is what Wyckoff calls it. It's where bigger players are accumulating large stacks. And in order to do that, they make the market look really scary, like it's going to go down forever, like right here, right? So the market got really scary. Everybody left. Let me get volume off this chart for now. Everybody left. Everybody's super scared. It's going to zero. And then big boys fill their bags here. And once they fill their bags, then they pump it. And then they distribute it, right? So this is like I guess you could say it's either a macro redistribution or macro distribution or a micro redistribution here, where it depends on what you consider the bull market, where the bull market stops and where it starts. Same thing happened here, right? So we look down here, big boys filling some bags down here. All of a sudden, holy fuck, we're God pumping, fucking Chad candling it up. It goes up to an absurd level. People are fucking busting in their goddamn pants at this point. People are completely euphoric. And then it's a sell-off, and it bounces here until it's been distributed, and then we go back into an accumulation range, right? So, depending on, where they're doing this, you say their average exit maybe is here, or maybe their average exit's right here, and their average entry for the next time is somewhere around here, clearly, right? But what you have to do when you do this is you can't just accumulate and then say, okay, well, I got it, it's done, it's going to pump now. No, you have to accumulate a certain percentage here. I don't know what this percentage is. I'm not some whale. I trade with a very modest stack. I'm just really interested in it, and it is really interesting. I think it's clearly very interesting. It's a shadow. In some certain respects, it feels like a shadow market. It's which is fun. So, anyways, you have to accumulate a bunch here, right? And then you go into a markup phase. Wyckoff calls a markup phase. So, what a markup phase is, we've got accumulation is through here, right? And then we've got a markup phase through here where we've accumulated. I'm going to go ahead and mark it here. Right? And then we've got markup. So what you have to do is you have to accumulate a certain, say, for the sake of this video, let's say they bought 50% of their total account value here, right? So say they longed it, they go into a margin exchange or a futures exchange like BitMEX or something, you long it, and then you fucking use all your USD to buy it up on all the spot index exchanges, right? And then up at the top, you start selling it back, and that means you have more USD, and then you keep selling it and suppressing price, and then you get them to capitulate, right? And then you buy it up with even more USD this time, right? So you get a bunch of sell pressure. That's why it's all liquidity, right? You have to get a bunch of sell pressure in order to be able to fill your bags without accidentally pumping it. You don't want it to go up while you fill your bags. You want to keep your average entry somewhere right here. You don't want it to fucking start buying and all of a sudden, boom, you're into markup, because then your average entry is going way up. You got to find a way to suppress the price into a range and buy there, right? And that makes plenty of sense. It's very logical. And so once you do that, you have to have enough of your you have to have enough fuel left to make sure that you can pump this thing, right? You have to pump it up because you have to get it to the next range. So you have to accumulate and you mark it up, and you mark it up and get it to a distribution range, right? So we get this distribution range here. Put this up here so we can see it, and I'll label it distribution. Okay, so that means they're distributing. They've accumulated the coins down here. That means they filled their bags. They pumped it up, made their bags worth more, and then they distribute it, emptying their bags. So they're extracting the value from that cycle that they did, right? So you say you bought, $1 million worth of Bitcoin here, which obviously was a lot more, and then you pump it up and you had to buy another million on the way up, right? So here you had to buy a bunch of, and then you had to buy a bunch here, and then whenever there was some bearish sentiment, you had to buy through all those sell orders, right? And once you can break through that resistance, you can get it up into an accumulation or a distribution range. So anyway, so their average entry, say they bought $1 million all the way through here, kind of staggered, and they bought $1 million here, right? So their average entry is probably somewhere right here, probably about where we're at, maybe a little bit lower. And what they want to do is, each time when you go through, if it's a very macro bullish, like obviously Bitcoin is, on everybody's seen a log chart of Bitcoin, it only goes up, right? Over long term, all the holders are doing pretty well. If you bought Bitcoin at some point and didn't sell it, most likely you're up. If it's been over a year, you're probably up. If it's been over 2 years, you're definitely up, or 3 years, or whatever it is. Anyway, so then we enter the next accumulation phase, which is what we're about to be entering now. Although I think it's going to be somewhere in the upper fives probably. We haven't really capitulated yet, but we'll get into that. Then you go distribution, and then you go into kind of it's a markdown phase, right? So while you're distributing, just like you had to buy on the way up, you got to sell on the way down, right? So we'll call this markdown. So just like you had to buy, whatever the percentage is, who knows? Like I said, I'm not a whale. I don't know what the actual percentage is. I haven't done the math on it. We take pretty intense market analysis to understand exactly how much you need to mark it up. But anyways, so you accumulated, you marked it up, you distributed, and then you start marking it down. So your average exit needs to be higher than your average entry, right? And you have to make sure the market keeps going down, and you have to save enough to be able to suppress it, right? So when you lock it into these ranges, let's look let's look at this accumulation range. It's a classic like ascending triangle. You know, we've got tops like somewhere like right here or something, and then kind of has a little triangle thing here, right? Everybody's seen this before. Shitcoins do this all the time. This is a classic accumulation pattern. Like what's happening is you sell it into this panic phase, right, and then you buy it back up. But when you're buying it up, you make sure that you can place enough limit orders at the upper end to where you can suppress the price again, and you let it do whatever it wants in the mid range, which is why you don't want to trade mid range because mid range is kind of random. And eventually you get it to sell down. If it's not following what you're wanting to do, and when I say it's not one actor. There's not just one whale that fucking sits on his throne and controls it all. It's a concerted effort between people that probably don't communicate with each other, but just understand market dynamics. A lot of people probably wanted to buy here, and they did. And the smart money was buying here during this accumulation phase, and was adding on the way up. Just like whoever is the biggest player, which obviously we don't know who that is. Whoever's the biggest player was doing the same thing. So, anyways. You buy all here and you mark it up and then you sell it down, and that's the basics of Wyckoff. Now, why does this work, right? So, the reason this works is because of market psychology, and also because the money is moving from, you hear people talk about weak hands to strong hands, right? So your money moves from, during this, you move out of the weak hands, people that have a really low time preference and want a Bitcoin to go up right away. That's the only reason they bought. They sell. They needed that money. They shouldn't have invested that money as soon as they did, right? So what that means is that it's shaking off a lot of the future sell pressure by doing that. So the reason this works is by doing that, what they're doing is they're moving the money from people who shouldn't really be overinvested in the market like they are into the hands of people who should be invested in the market long term because they have the capital to do so, right? And they're not going to sell. So once we get those weak hands shaken out, which the weak hands thing is kind of a meme. Like I said, all market dynamics are memes. That's what the market is. Especially with this. Bitcoin is just a chart. All it is a chart. Just a chart. There's really nothing else. Like there's some, there's news and shit like I was saying, but it's mostly just a chart. Like it's mostly technicals. Like if you're worried about fundamentals for Bitcoin, you're trading it wrong. Like you can see me on my Twitter. I do that shit I talk about the shit all the time. It's technicals. Okay, that's what it is. And anyway, so we get a bunch of people that are true believers, or that at least are true believers in the number going up. They don't have to be believers in the technology. They bought a bunch here. They sold a bunch here. They're going to buy a bunch somewhere around here, right? So what I'm thinking is, if I had to guess, we squickle, but we're going to go down some more, and we're going to probably go below the 200 weekly MA. We could probably go something like this, okay? But we have to do it for, I don't know if we're going to go into a full reaccumulation cycle. Like, I don't know how long it's going to be. But let's say it's something like this, right? So this would be utilizing Wyckoffian principle, right? So it's a spring. So I was telling you I was going to talk to you all about springs. So with springs, what's happening is and I think that springs can happen on trend lines too, because I think the trend lines are very effective. You saw trend lines on my chart earlier. You see trend lines here when you draw a triangle. That's how you recognize patterns. Patterns matter, and the reason that this pattern makes any sense is because of what's happening that formed this pattern, right? We're not going to say, oh, I drew a triangle, I'm a genius, or that's why the number's going up is because of the triangle. No, the number's going up is because it's a triangle, because why it's a triangle. Okay, so the reason behind it being a triangle is because it's accumulation, and each time we're having people front running each other to get in, right? So they're selling at the top, and they're trying to generate enough sell pressure here to where they broke the old low, right? And then they buy a fuck ton here, right? And then mark it up. They buy as much as they can in this range and mark it up. Really, what they're doing is they're just generating a net long position throughout this whole range. And in doing so, they've decided, whoever they is, like I said, it's a bunch of different actors that probably don't talk to each other and know shit about each other. And in doing so, what they're doing is, in generating this net long position, people are front running each other, right? So it goes up, and then people are like, oh shit, well, I'm going to go ahead and start buying here because I want to get in on this too, because this shit, it's going to pop, right? I have enough money to help pump it. And so they're all going to pump it, and then it goes up to here again, and it's going to get sold off. And the reason it gets sold off is just to hold the price down for just a little bit longer, just to suppress the price just a little bit longer, right? What you want to do is you want to keep it in this range until you filled your bags enough. You don't want to keep it there any longer. Once you filled your bags, you need it out of that range, right? So we get the Soros candle. And once you break out of that range, you start liquidating people, right? So that's why it's it can be bullish and it can be good for the space long term to have futures markets, because a lot of the arbitrage bots use the futures markets along with the exchange. And so what you do is you liquidate people on futures markets, and then you place limit bids right below the price, and you prop it up with iceberg orders or something similar, and you just keep the price propped up. And as long as you keep it propped up, those arbitrage bots are going to do the work for you, right? They're going to go onto the spot exchanges and they're going to start doing the buying and make it to where, okay, the futures are trading higher, the spot should be trading higher too. And this is, of course, a gross oversimplification, but that's essentially how it works for a lot of this, right? Anyways, so we talk about springs. So here you can see a spring on the trend line, which I believe in springs on trend lines, because I think that, especially with most of this market being done by, it's not a, people aren't buying on fundamentals, it's all the chart, right? So you dip it below the trend line, and that lets you get a bunch of fucking buy pressure, right? So you've got here, and you see this little wick that touched it perfect, and you see it start touching up against it to confirm that that was the trend line that everybody was fighting over. It's riding up against it, and then it goes down, right? Here you get a bunch of sell pressure because everybody's like, oh shit, it's going to dip. It fucking confirmed that trend line. Number's going to go to fucking 1,000 now, 1,800 now. No, everybody's going to fill their bags here, and thank you for all those sell orders that went right into my ask, or right into my bids, and now I've been able to fill, and we can pump it again. So you pump it back up again, and then you can buy again at the trend line. You can defend it this time. And after that, after a while, it probably starts defending itself because the market starts to understand where the lines are. But that's a spring right there. That's a trend line spring, which Wyckoff talked about springs more in this context. So it's saying that, we've defended this level, and then once it goes under, it gets bought up. What that does by going under, like I was saying earlier, it generates a ton of sell pressure, and you need sell pressure. If you have, a big USD position that you want to convert into a big BTC position or any other asset that you're trading, then you need a lot of sell pressure. So, you can sell it through this trend line, get everybody to panic, and when they panic, they'll sell right into your orders, right? So you can stop the price here, and by doing so, not only are you making it look bullish, which means you'll generate buy pressure for yourself later, because once you buy it back over the line and it retests it, the market's gonna come back, right? People are gonna say, okay, well, clearly it just retested support and it's gonna pump, right? Basic market dynamics. So you let it, you can sell it through that support, and then you can fill your bags, most of your bags right here. And then you can pump it, fill your bag some more, and then once you get it to break these old highs, you're going to have quants and bots and retail traders, and everyone's going to say, okay, well, it's breaking the high. This is a higher high. It's time to buy. It's a good time to buy. We finally made a higher high, right? So that's the purpose of a spring, and that's what a spring does. And so you can see springs on a lot of this stuff. Like, right here we had a spring where it's tried to make it look bullish, right? So it felt kind of bullish, right? Maybe it's more like this. The line is here, right? So it rode that line for a bit, and they're just filling sell orders on our ass. And they did it on me too, and they did it on you, and they did it on most of us, right? Most people, I guess some, God tier traders were selling here, and but most people wanted it to be bullish. Most people thought this was the spring, right? Most people thought, well, okay, that's over now. But we get up here, and then, Plus Token or whoever the fuck else sold into us, and we sold all the way down, right? But right here is where everybody was filling sell orders. Look at those big wicks. Ton of sell orders are filled here, and you can use volume to check it too. Look at that. Tons of volume here for a wick. So that means that they got the price up. It's a ton of buy pressure. And then they just sat on the price and just slowly and happily filled their bids, and they're going to dump it, right? So it's a redistribution. And it was back in the it was in the distributive range too, so it makes sense that it would be. Anyways, Wyckoff is a meme, I guess, but really what it is it's using chart patterns to understand liquidity. So that's the core of it. You're using chart patterns to understand why the price is doing what it is and where the price is going to go next. So I personally think that, I was wanting this to be bottom. I really wanted this to be bottom. But if you look, we distributed up here. Your average distribution amount is somewhere around here, right? Maybe at the center of the triangle, maybe a little bit lower. You got to think about, the markdown phase and stuff and having to sell some off. But your average, exit that you got somewhere up here, we haven't really gone down far enough to really get a good, accumulation range, and we haven't really gotten a capitulation either. This was a scary candle that we had, but it wasn't that scary. I don't think we bottomed. We might. I don't know. We're going to see. But what's going to happen is we're going to look at this range and see what happens as far as the 6,800 or so region. If 6,800 gets defended, then I think we might have bottomed. And that's where I'm looking to long, is around the 6,800, 6,850 or something like that. We're not going to pump right from where we're at. Everybody talks about liquidity up here in the 8s and the 9s, and there is liquidity, but it doesn't mean we're going to go there right now. So anyways, I think we see something probably similar to this, and it might be, it might be higher up. Maybe it's something like that, but we're going to go sideways for a while. It's not going to just start God pumping. Let's look at the low time frames, and then we'll end this video. That's the high time frame Wyckoff picture, and I'll close it off with a little bit of what the current PA is. I know it's getting long, getting like a long video. 1 hour. All right. So there is an argument to be said that we had our spring, and that our spring was this. When we broke these, these lows here, or let's say it's that. It doesn't really feel like a spring, does it? It kind of feels like we need to be under there a little bit longer to accumulate. Maybe it was something like this, and we accumulated here. But either way, we kind of need to be under there a little bit longer, in my opinion. But there's an argument to be said that that was the spring. In reality, what I think is needing to happen is us needing to retap that line to retest it. If that was the spring, we should be able to retest, this 67.40 or 68-ish, somewhere in that range. We need to be able to retest that line. So it's somewhere in like this range here. We need to retest this and bounce from it, and then we could say, well, maybe that was a spring, and maybe we're out of an accumulation phase, and we're going to start another mini micro accumulation phase. But it just hasn't been very long. How long has it been since we've been down here? So it's been since the 21st. So it's been a month and a little bit, right? Let's look at how long it was in the last one, the macro accumulation. And there's something also here. This just be a reaccumulation. It just means that we're going to do it again, but on a smaller scale. And I'm kind of leaning towards that, but I want to see it hold this 67, 6,800 range. This lasted from November until March. This lasted 3 months or something, 4 months. 5 months? It lasted a long ass time. What is that? 6 months? However long it lasted much longer than what this is, right? Let's see how long it lasted. 131 days, right? So by that, we would be looking at around halvening, being out of the accumulation phase, which kind of makes sense, right? So what you could see is we could see, breakout of these larger trend lines. Like we've got this trend line here. We've kind of broken out of a little bit. And it could be generating buy pressure, but we would want to see it locked in a range. So we'll see how price action develops, and watch these like 4 hour and higher time frames and see how it does. But the current PA is not bullish, in my opinion. The current PA is maybe it's high time frame bullish, you could say, but it's definitely not low time frame bullish. This doesn't hold here. I really doubt this holds here. I think that we go down to here or something, and I think that's what needs to happen. If we're going to pump, we need some more bag filling in this little gap here, and then we need to see it come up and confirm a higher high, and then it's going to pump. And I think it's going to go higher than 8K if it does that. If it comes down to here and tests it, I think we start looking at like the 200 DMA, which is around 9,200 or so, which would make sense, right? Because we need to go back into that range and retest that range where we distributed and then did the spring and then dumped, right? It would make the most sense for us to do something like this. And let's see if this plays out, but something like this, right? Test that line there. Anyways, I'll make more videos in the future. Thanks for bearing with me and listening on the first video. It's got a little bit longer than I hoped, and hopefully I can cut it down some and post, or whatever you want to call it here. But I'll make some more videos, and just hit the subscribe button. If you're still here, you watched a 30-minute video, you might as well